really down big time. Let's go to Yu-Dee Chang about the whole technology issue. Yu-Dee, you know, Apple is just such a successful product. It is over $600 again, the share price. Clearly, they have, even if iPhone 5 doesn't take off like gangbusters, it will do pretty well. Although there are supplies issues for Qualcomm as well. There are chip supply problems that they have. Maybe that's more of a problem than whether or not Apple's going to sell its new iPhone.
Well, I don't necessarily think so. I think basically the trader is correct. I think basically the demand is being pushed off into the first quarter of next year. I think overall speaking, I like actually both Qualcomm and Apple. I think their growth will be back. But just for now, I think demand is slowing down a little bit. Let me just stop you there, because what you were suggesting is that until the end of the year, technology is going to be a drag on the economy because people are going to be putting off their purchases until 2013. Do I hear you right? Yeah, I don't necessarily think it's going to be a drag, but I definitely think it's going to slow down a little bit. People are just not that excited, exactly like he said. Like myself, for that matter, I'm holding off my purchase of the iPhone 4S and waiting for the i5, and we keep saying, when it's coming out, when it's coming out. Last time we heard still September, October, which means Q1 of next year.
Let me bring in Harry Clark of Clark Capital. He's the CEO. But first, we have to say that behind him, he has a massive storm. That's 6th Avenue right behind you. Yeah, exactly. Wow. It's really super dark, and we've got a ton of rain. And so we get all excited about this because it's 100 degrees here right now. But let's heat up people's portfolios here as the rain comes pouring down right now. And you've got to tell me, you know, you're bullish short-term, long-term rather, but
yes,
kind of bearish short-term. And I'm talking really short, 2 to 4 weeks. Why? When we've seen more than 3 dozen S&P 500 companies beat earnings estimates so far during this season.
Well, those estimates have been really good. You know, as of the other day, 35 of 42 would beat, and that's pretty good. More beat today. Only a couple, like Qualcomm, missed. But our indicators show the market's a little overbought here. We need a correction. I look for a market down to the 200-day moving average around 13.05 or 10 to set up a really good intermediate-term bottom for the next 1 and 2 quarters. I think the market's tired here. A lot of indicators show it's tired, overbought. So that correction will be a buying opportunity, in our opinion, for a nice rally through the end of the year.
Okay, right. But wait, what correction? Like, how low does the S&P? I mean, you're looking at basically 1,300 here.
Yeah, 13.5, 13.10, 4%. 4 to 5%.
And then moves higher up off the floor.
That moves higher, a good bit higher, yes.
Well, that'd be about 300 points off the Dow. Yu-Dee, what about that? I mean, we did have the beige book come out today. It looks pretty grim, to tell you the truth, reading through the beige book. I mean, with the exception of auto sales, everything else was a drag at best. What about his view that we're going to go into a slowdown for the next couple of months, but we may be able to come out of it after we get a correction of about 5 points?
You know, interestingly enough, different opinions makes the market. No disrespect there, but I'm actually totally on the opposite side of him. Over the longer-term basis, I'm actually bearish the market. Over the short-term basis, I believe we actually have some momentum building the market.
A million people, a million opinions. Go ahead.
Yeah, I really think we're in a slow growth, slow interest rate, slow yield environment where we're having a series with cyclical of risk-ons and risk-offs. We went through a period of risk-off between April to June. Now we're actually right in the middle of risk on again. So I think there's more to go.
Well, you like IBM? Hold on. We just got the numbers right now. Robert Gray, how'd they do?
Hey, they are coming in better than expected, Liz. 351 is the earnings per share number here, just crossing the wires. $25.8 billion is the revenue number here. And they are looking for a full year earnings per share of at least $14.40. But keep in mind, their earlier forecast was for $15. So that may be why you're seeing the stock coming back a little bit. Plus, keep in mind, it was up pretty big, 2.5% in today's session as well. Can continue to look through here, the release crossing the wires here, and we'll get some more numbers for you.
Well, the macro environment, Yu-Dee, as it pertains to IBM, obviously they are a huge global opportunity here, but also that leaves them to serious exposure to problems like the European debt crisis.
Yeah, absolutely. Not only so, but also in Asia. But on the flip side, they're with great credit rating. A couple of months ago, they actually issued a big bond offering, got a 2-year of $1 billion for 1%. So now they could take that cheap money and put it to work on a global footprint basis and make money. IBM, simply put it, is a cash cow. They generate cash, they have cash, and they will continue to earn cash. I like IBM a lot.
Let me go to Harry on this, because you guys might disagree or agree on this. I'm not sure. But you have to look at the revenue, because last quarter, the company fell shy of their revenue estimate. So they disappointed last. Hardware and financing hit particularly particularly hard. They're not making as much money there. That's why they're focusing more on software and services. That gives you a much bigger profit margin than the hardware. Do you think they'll succeed on this, Harry?
I do. I think it also shows technology is far from dead. Even though Qualcomm missed, Apple looks soft. Technology is not dead. I think when the market correction is over, technology, materials, energy will lead it higher into later on this year. So the IBM earnings are good news.
But, Harry, what are you buying right now? What do you like at this point?
Well, I'll give Liz a couple of things. American Water Works, Midwest, Southwest Water Supply Company. Water is going to be a precious commodity someday. The earnings doing well. Nice dividend. Another one, Hospitality Properties. A great REIT paying over 7% in dividends.
Wow. And
dividends where it is today. You got to have some earnings and some income from your investments. That's a good property. Hotels, restaurants. Okay. They renovate hotels. Doing great.
Harry, let me interrupt because we told you the big three were coming in, and we got them: Qualcomm, IBM, and now American Express. Robert, what are the numbers?
Well, American Express coming in at $1.15 a share. That is ahead of estimates there, $1.09. The revenue numbers, though, a bit light, $7.97 billion. Analysts on average looking for $8.09 billion for Amex, and seeing a little weakness in those shares after hours here as well.
Okay, so Mark Sebastian, now I get to the pits there because this one's probably going to be something a lot of people focus on. I'm seeing that U.S. Card Services reported second quarter net income of $718 million, up 8%. So if anybody thought there would be some softness, I mean, I'm not exactly sure if that's going to excite the markets, but this at a time where people are worried that the higher end consumer, that customer of American Express, might be curtailing their behavior.
Well, it appears not.
Right.
I think that as long as it appears that, some sort of tax deal, believe it or not, the tax cliff matters to AXP probably more than any credit card company and as much as your JWNs or your coaches, because, American Express could be affected by all those tax rates on the higher income earners going up. So, if AXP continues to perform, that means there's a perception that deals are going to be done, and we don't have to worry about that tax cliff quite yet, and that could be a little bit more bullish toward the consumer. Kind of goes along with housing starts. I think if you start seeing some wealth built in houses, that starts to really help American Express
Mark,
and some of the other house names as well.
I just got to get a question for Yu-Dee here, because 34% of all the bills of American Express are paid in currency that is not the dollar. That is, they are paid overseas. When the dollar is strong, American Express gets a lot less from that 34%. Is that going to affect American Express, Yu-Dee?
Yeah, I don't necessarily think so. I think currency is a little bit factor, but it's not the determining factor. I think American Express, although they cater to the higher-end so-called consumers, users, I think higher-end consumers really do not get hurt in the soft economy, which is what we have right now. In the majorly deteriorating economy, of course, American Express might get hurt. I actually like American Express also going forward. I believe we are in a soft economy, but not a double-dipping economy.
Which is why Yu-Dee still has 30% of his holdings in stocks. He hasn't sold it all. He's got 60% in cash, treasuries, and gold, but 30% in stocks. Guys, thank you very much. Good to see you. Harry Clark and Yu-Dee Chang. And Mark, we're going to see you coming back when the S&P futures
Let me just make a point about IBM before we jump to something here, because IBM is looking better in the after hours because they are raising their guidance. I mean, it just looks like a better rest of the year for IBM.
Very good. Well, we talked about this